Speaking of rates and expectations, let's look at the dot plot, the projected federal funds rate. This comes from the Fed statement, the summary of economic projections. These are the different Fed officials and how they're indicating or forecasting rates into the future. So one individual had a hike for the rest of the year. Not quite sure which Fed official that is, but certainly not consensus there. 5 members expecting no more cuts this year, but 9 or so consensus are in the 2-cut realm, which I think was a positive for the markets to see that. Looking at a little further into the future, these aren't often great predictors of what actually happens, but it's interesting to get a lens into the Fed members' minds here and how they see things. And it is a progressive move lower throughout 26, 27, and 28. And then longer term, looks like the consensus is, or the average is around 3%. We'll obviously see how that plays out. The main factor working against rate cuts is inflation, and that's the dual mandate that the Fed has to operate within. Price stability and maximum employment can be in conflict. Always interesting to see which of those the Fed is focused on the most at any given time.